Hey everyone, Kedge here, Senior Investment Specialist from Wealthi. Jumping on today to share a little bit about an area that we should be looking at a lot more closely if you're thinking about investing. This area is located in inner Melbourne, just 2 to 3 k's out of the CBD. Sorry, when I say inner Melbourne, inner North Melbourne. So what I'm going to do today is take you through some of the data to show you why this location. And then we've also been able to pick up an off-market opportunity in this area. So I'll give you some high-level information about pricing and cash flows. And if it's something that kind of ticks the boxes, feel free to reach out and happy to go through it in a little bit more detail. So what I'll start by doing is talk about some of the macro level information about what's happening in Melbourne. And then I'll go into this specific suburb and why we've identified it as being a bit of a hotspot. So to start off with, one of the things we need to be looking at for long-term sustainable growth is population. You can see here, Victoria, Melbourne, it was the state that was the most hit during the COVID pandemic and people leaving out, moving to areas like Queensland. But what we're going to see now with international migration now kicking in, Melbourne is going to lead the way, and you can see here from the forecast, it's going to be the leading state by far in terms of a percentage growth of population per year. This is something that you can all access. It's on the government website, population.gov.au. And what does this all really mean? So overall, what it's going to mean for Victoria is actually Melbourne is going to overtake Sydney's population based on this run rate about 2030, 2032. So one of the data points I like to look at is comparable stock in Sydney and in Melbourne. The reason being the fundamentals for each state are very similar in terms of population, infrastructure, and employment. So right now for comparable stock, and even this particular area I'm looking at in North Melbourne, you're looking at almost like a 40 to 50% difference for comparables in Sydney. Although I'm not saying that these prices are going to overtake Sydney by 2030, 2032, but that gap is going to close quite significantly. And so there's huge opportunity in these markets. Other thing I want to highlight is what's happening in Melbourne right now. So with the population growing, migration kicking in again, and supply levels being quite tight, we're seeing rents grow quite rapidly. Just using this data, I'm going to use units here because we're going to be focusing on apartments in the inner north part of Melbourne. And in the last quarter, that segment had 5.1% rental growth just in the last quarter. And it's forecasted that that's going to keep happening and potentially even more aggressively because of the combination of this population coming in married up with the tight supply of stock in the area. And as much as what it's doing to rents here, we're going to slowly see starting to affect the values of property as well as we start to see this flight to affordable stock, which is happening on a macro level due to the rents increase, due to rates increasing, interest rates, and things like inflation as well. So something to keep an eye on there. What I want to do is as much as we're going to have peaks and troughs with growth, what I want to highlight here is apartment values in Melbourne over the 25-year average have grown at a rate of 6.6%. So no matter what's going on externally, you have peaks and troughs. It's fair and reasonable to use a long-term number like that to kind of project what the growth is likely to be. And in a cash flow that I'm going to show you later, I am going to use 6%, so you can kind of see that coming up there too. So now zoning in to the particular location that I want to be looking at, it is here if I zoom in enough, you guys see it, North Melbourne. Just to kind of show you, that is roughly about, depending on which part of North Melbourne, you're 2 to 3 k's out from the Melbourne CBD. So that off-market site that I mentioned earlier that we've picked up is in this location here. And What other factors we're going to look at, and the reason why we've identified this as a hotspot, other than the population and supply levels, is then now we're going to look at the infrastructure currently in the area and also the infrastructure that's coming to the area, which is arguably more important because usually people react a little bit too late to what's happening and the price has already moved. So it's nice to get in a little bit early before it's already there. So right now, from this particular site, you've got here, in terms of transport, 2 stations which are both about equal, 8 minutes out, Macaulay Station and Flemington Bridge, which is here. And there's a third one that's being under development at the moment. If I zoom in here, we should be able to find it. It's called Arden Station. This one is going to be completed in 2025. Around this Arden Station, there's a whole thing called the Arden Precinct, which has got about, $7 billion worth of investment into this location. So I'll highlight a little bit about what that is in a second. And then so you've got that happening just south of the area. And to the right, you've got a huge medical belt as well, hospitals, research facilities. And what I'll do is, once again, I've taken a few notes for you so I can I've documented it. So I'll go through that with you in a second too. This is the official document from the government about the Arden Precinct. I'm not going to click through this and go through it because it can be a bit dry. But what I've done is I've taken it out of here and just taken some high-level notes so I can share with you. So this Arden Precinct that I mentioned, it's 50 hectares of urban renewal, and as I mentioned earlier, $7 billion being invested into this location. So I like to, for those of you that are in Sydney, I like to liken what's happening here very similar to the Redfern story some years ago. Not only is it similar proximity as Redfern is from the CBD, but the gentrification that's kind of gone in that location as well. And yeah, if you're thinking about Redfern in Sydney to find brand new 2-bedroom stock, you're looking well north of $1 million. And the ones I'm going to show you, we got them sub 700. But anyway, just jumping back into this for a second. So in this Arden Precinct, through this development, what it's going to do, it's going to bring another 34,000 jobs to the area. So once again, when looking for investment opportunities, you want to be in areas which have proximity to jobs or easily transportable, or you can easily transport to these locations. So there's that metro train station that I mentioned that is also going into Arden. That's going to be completed in 2025. You can see here that this is that new metro line. There's Arden, and that comes in through to the CBD through there. And here's just an image of the works that are underway and some CGIs of what this is likely to look like when once completed as well. And now the medical precinct that I mentioned earlier, once again, taken a few notes, won't take you through it line by line, but ultimately there's a combination of 30 different hospitals, medical research institutions, biomedical and universities. What this does, it brings in 49,000 employees to this location. And some of the other key notes to note is 7,000 new biomedical and health students are educated in this precinct every single year. And it attracts about $1.3 billion per annum in research funding. So the type of quality type of people that will be living in this location and potentially renting in these locations as well is also going to be good for the values in this area. So it's not only about the population, it's about the demographic and types of population in this area as well. Now, just what else I got here is the vacancy rates in the area. So having looked at this a few weeks ago, it was sitting at 2.5 and it's now down to 2.17, and it's coming down even more aggressively. So I'm sure if we look at this in another 30 days time, it will be much lower once again, as we kind of highlighted before with why the rents are increasing. So it's just a little note there to have a look at. And I think once again, if you compare that to the wider Melbourne area, you're almost at 3%. and this North Melbourne area is at 2.17. A data point I don't have here, which is also good to look at, is the price gap between houses and apartments. What generally happens as the house prices increase and that gap widens, and apartments tend to follow. The gap at the moment is the widest it's ever been, and as much as some of these house prices are going to soften, we're going to see the apartment market close that gap as well. Now, going into the specific opportunity, it is an off-market opportunity, and we've been able to pick up some 2-bedroom, 2-bathroom, 1-car park, brand new properties in the area for between that 660 and 700 range. And I guess probably doesn't mean much unless you've got some comparables. So to highlight the opportunity here, we're looking at existing properties here. So this is actually another brand new property here, and you can see on realestate.com, you're almost in the mid-900s starting from. And existing properties in the area around that 750,000 mark. And there's some others that are in the late 6s and mid-7s. So if we're getting brand new properties for sub that price, I guess it highlights from the get-go how much inherent value is in the deal. So that's that. And what I've done now is put together a cash flow based on the average price point there and based on the rents and whatnot we're getting in that location. So what I've done here is put 675,000 for the average price. So as I mentioned, they range between 660 and 700, depending on which ones you kind of go for. I've thrown in 20% deposit. Once again, if you want to run different scenarios, feel free to reach out, and happy to do it based on your personal scenario. And I've put in a capital growth rate of 6%. Once again, I do think it's going to perform a little bit better than this long-term average because of some of the things I highlighted before, but you can see what this property is likely to be worth over time if it follows that 6% compounding each year. And rents in the area, 575 as a middle value there. Once again, I'm being very conservative with those rents. So I'm using the middle value. Being a brand new property, you're probably going to get more. And with what's happening in the market with the rental increases, it's probably going to be more than that in the near future too. But that's okay. We'll run it on this number. Better to be conservative and achieve better outcomes later. And I've thrown in here a 4.5% interest rate. You're probably getting interest rates almost 100 basis points less than that right now, around that 3.5. But with what's happening in the market and rates increasing, I want to do these cash flows at 4.5. So that way it's more realistic for what's likely to be the case in the near future. Thrown in all the expenses in here, like body corporate, rates, maintenance, rent management fees, and that's what it looks like annually there. And based on an income of 150,000, these are all the tax benefits that a person would receive. And after all of that, what that's going to mean is this property would be positive cash flow, $75 in year one, and kind of growing from there. So once again, the reason the cash flows work out to be so good is because of the inherent value in the deal up front. The pretty good rents you're already getting in the area. And the reality is, as I kind of mentioned before, it's probably only going to be better than this come time as well. We've only got a finite amount of these opportunities. So if this is something that kind of ticks your boxes or you feel like is part of your investment strategy, feel free to reach out, and happy to go through some of the finer details. Otherwise, we'll see you on the next video, and have a great day, and see you next time.